They still are a very big piece of the entire tech ecosystem. They have very strong relationships. They have a good consulting business. They have Red Hat. They sell mainframes. Now, remember one thing. I mean, I know people getting very excited, but if software spending is climbing between 10 to 12%, IBM's still growing, 6 to 7. So they're still underperforming the entire broader software space. But that's okay because, when you go from 3 to 6, that's a big change also in terms of the growth rates. This is just a matter of overall tech spending improving after 2 years of underinvestment. This is something that we have been saying for so long. Tech as a portion of total GDP is a very small number. Most of the companies around the world, barring the consumer technology companies that we see, have underinvested in technology. So when you have rail companies or airlines or auto insurance companies, they really need to be more digital. And one way to get digital is to move a lot of their infrastructure to the cloud. So all of those things play in well. We have not seen good spending in 2 years. I'm pretty happy that 2024 we may see a rebound.
So, Anurag, how does IBM fit into the AI discussion? Because I know the CEO called out the client demand for AI is accelerating. How do they play in that space?
So majority of the stuff that they're going to do is on the consulting side. So if you are a large company, you need to figure out what to do. They have a lot of consultants that can help you clean up the data, use whichever model we want to use. You want to use something from OpenAI, Anthropic, all these companies that are out there, they'll help you with that, help you train the models, and then at the end of the day, you make it for your business case. It's not as easy as just, using ChatGPT and answering questions. For an enterprise use, you need to do a lot of data cleanup, data aggregation, because that's what's needed to clean up your, the models itself.
How fast and long can that kind of growth rate of 6-7% go?
I think if this year they are able to go to 6-7%, I could expect then, another 100 to 200 basis points improvement next year. And that's actually not a bad deal because you remember the old IBM just about 4 or 5 years ago, they were not growing at all. So in order for them to actually come up with a high single-digit number next year would be really welcomed by the market.
So what's the read-through here, Anurag, for greater tech here from IBM? Can I say I'm just going to go out and start buying more of these names? I'm looking at like NVIDIA, for example, up 1.5% today, up 25% year to date, and of course up 220% over the trailing 12 months. I guess this is a pretty good read-through. Can I do that?
Yeah, so we had run a CIO survey back in December, and we kind of got the indication that it's going to be a year of spending more aggressively compared to the last two in 2024. But the way we had built that, and we got the chip strength going on right now that probably carries on till the summer, and then after that we see strength in the software and the consulting area, which are more of the downstream play. But it's possible that we may see that bounce back, as early as second quarter or going into it because things. I think the leading indicators are good at this point. So I'm pretty optimistic that when we were thinking about a second half recovery for tech spending, it may actually happen in second quarter or maybe even as late as first quarter.
What are the derivative plays from IBM? Their suppliers, that kind of trade.
Yeah, so you have, companies on the services side. You have companies like Accenture, you have Capgemini in Europe, you have TCS and Infosys in India. So those are the 4 big ones from the consulting side. On the software side, I think this bodes well for everybody, whether it's, Microsoft, AWS, ServiceNow, Salesforce, Workday, the big software vendors, all of them should see some downstream effect if tech spending does recover this year.
All right, let's preview Microsoft here. I mean, again, the stock just hit a $3 trillion market capitalization, which got a lot of people's attention. What's kind of the story here for Microsoft?
Yeah, I mean, it's a very similar story. We recently published a piece today which says, there is going to be a bigger delta between Microsoft and Apple's growth rate going forward. And a large portion of that is an improvement in the cloud and the other product growth rate in the second half. Now, if you look at the Bloomberg terminal and look at the function EM10, you will see that Microsoft growth rate has picked up for the next 4 quarters, but majority of that is because of the activation deal. If you peel through that and look at it, organic growth rate, Street is still expecting that 11 to 12% over the next 4 quarters. We think that's going to change. We think the second half that growth accelerates to 13% or so, and that's because of the reasons that we mentioned mentioned above, that after 2 years, companies are finally spending. And one of the things we saw was, if you have a cloud business infrastructure, then you can reduce your usage because that helps you reduce your costs. And that's what a lot of the companies have done over the last 2 years. We think that's going to take a reversal this year. On top of that, Microsoft should get more benefit of their relationship with OpenAI because they are OpenAI's backend infrastructure. So I think that's also contributes. So we are expecting growth rates to pick up for Microsoft in the second half.